Okay.
Okay.
Hi guys. So today I'm joined by Michael that runs an absolutely fantastic fund at Fusion Wealth. It's very different. It's a crisis fund. If we've learned anything from recessions and frontier markets, it's that countries in the frontier market or crisis countries, for example, Vietnam, have had the ability to skip recessions that were likely to be in the West. So it's an absolute honor to be joined by Michael. He's been in Asia since 1985. He's seen it all. I'll let Michael speak a bit about the funds and ask questions as we go on. So, Michael, please feel free to explain a bit about your fund and where you invest, what countries, and a bit of the kind of macro perspective on the countries.
Sure. First, thanks a lot for having me on the podcast. And good to meet you and by extension, all your listeners. The fund was started about 5 years ago. We're an equity fund. We are not strictly a frontier or emerging markets fund, but with there's more. Basically, there's for every there's about 20, 25 maybe developed markets in the world, and about 120 markets, stock markets that come up on my FactSet database. So for every one developed market, there's about 4 or 5 undeveloped or frontier, or what is classified as frontier or emerging markets. And a lot of times they get classified as frontier or emerging, not necessarily by the level of their economy, but mostly by the liquidity of the underlying markets and how easy or difficult it might be to build a ETF or an index around those things. So we're not, basically the fund was set up to invest when and where there is a financial crisis. And a lot of that thinking is that, the best returns in Asia, since I've been alive at least, have been, say in Indonesia or in Southeast Asia, and the best time to buy Southeast Asia was during the Asian financial crisis. So some of the high quality companies that I was looking at in Indonesia before the 97 or 98 to 2001 crisis, they've gone up over 200 times. One was even up 1,000 times from its bottom in 1998. So just fantastic returns, high quality companies. We knew they were great companies going into the crisis. They remained good companies throughout the crisis. There are a lot of problems, but they were, the best time to invest is, it's kind of like Buffett or a lot of people, other people will say the best time to invest is when everybody else is selling and panicking.
Yeah. And where in the fund now, what regions are you located in, and kind of what companies have you got kind of some of your main holdings in right now? Because obviously we're seeing quite a lot of crisis in the West at least. So where do you see opportunities for your kind of fund presently?
Sure. Yeah. So right now we have exposure to 7 markets, 6 primarily. Their biggest exposure is in Uzbekistan, where we hold about 25% of our assets. The second is in Argentina, which is about 17%. The third is Egypt. The fourth is Turkey. And then we just initiated in the last couple of months, we initiated a 9% position in Sri Lanka.
Okay.
Then rounding out that we have Nigerian and Pakistan equity, and one company in Pakistan.
Okay, and on touch a bit on Uzbekistan, because I think it's got great potential. It's opening up. It's kind of less reliant than say Kazakhstan. It's got a better agricultural commodity base, young demographic, and starting from a low GDP. So where do you see the opportunities in Uzbekistan? And it's one that obviously gets kind of left out a lot or looked over. I don't even think the MSCI World Eye has it covered in its kind of graphic. So what companies do you see in Uzbekistan, and more broadly, what do you see about Uzbekistan that makes you invest there?
Well, on the broad scale, is just the reform program. I mean, I've never seen a country attempt so many reforms in a short span of time. 6 years ago, before the current person became president, he was ruled, I think, for what, 25, 26 years between the end of the Soviet Union and 2016 by a guy named Islam Karimov. And there are a lot of times the country was compared as being super closed and pretty, almost as closed as North Korea at times.
Yeah.
And under the new leadership, Shavkat Mirziyoyev, the place has really opened up. In kind of in all senses of the word. When I first went there in about 5 years ago, almost 2017, end of 2017, I had to get a stamp at every hotel I went to, or a sticker.
Wow.
And before I left the country, I had to give those stickers to immigration to let them know, and so they could track every place I had been. Now, it was pretty lax back then, but you could see the system was set up to be very restrictive and very controlling. Now, when you go into Uzbekistan, I mean, they have the fastest immigration. And also, I'm sorry, going back 5 years ago, it was really difficult to get a visa there. I mean, I had to pay a lot of money, I had to pay consultants. Now you can get it online in a few minutes, literally. You have to wait a couple of days maybe for it to be approved. But it's all online. I mean, you had the fastest immigration. This is before COVID. I haven't been there for a few years, but you've had the fastest. I was in my hotel, I think, within an hour of leaving the plane.
Wow.
So like super fast, very efficient. It was just almost like night and day, almost from the time I got off the plane to the time I left the country after 10 days. And now, granted, I haven't been there in 3 years, but it seems like it's even gotten more efficient. And there's more tourism going there now post-COVID. So to make a long story short, I mean, they're changing things very rapidly. Tactically, the key reason I got into Uzbekistan is not so much because it's in a crisis, but because they had revalued their currency. So in about a year after the current president came to power, they had revalued the currency by 50% within one day to make the currency go down to its black market rate, or what was then the black market rate. They took out the black market in the currency overnight. And for U.S. investors, that basically means you get a 50% discount. Or for U.S. dollar investors, that basically means you get a 50% discount on everything you buy there, including equity. Now, I had heard about Uzbekistan a few years before that because I think in 2014 or 2015, Kazakhstan came up on my list of one of the cheapest countries in the world. Along with same time the rush back in 2014, you had the ruble devaluation, or huge depreciation, and Kazakhstan tangy went the same way. So Kazakhstan came up on my screen as one of the cheapest markets in the world at a CAPE of about 2 or 3 or 4 times. And so I went there. It's a pretty thin market, but when I was there, I noticed there were I met an awful lot of Uzbeks, and there are a lot of Uzbek restaurants, and you kind of scratch the surface of who's doing what there, and you'll notice that a lot of the administrators, kind of like the CFO level and the management level of a lot of Kazakh companies were actually from Uzbekistan and trained in Uzbekistan. So Uzbekistan is really the center, and they kept telling me that, Uzbekistan is really the center of Central Asia. It's where the good universities are. Tashkent was the 4th largest city in the ex-Soviet Union. It's really not it has a bunch of Tashkent and Samarkand, Bukhara, maybe not Tashkent, but Bukhara, Samarkand, Khiva. Those are some of the most important cities in the world about 800, 900 years ago.
Yeah. It's also got quite low debt.
Sorry?
It's got quite low debt as well, Uzbekistan, the debt levels.
It's got quite a what?
Low debt, sorry.
Yeah, they're they're very, very strong capitalized. I think they're the fourth or fifth largest gold miner in the world. So when they need more foreign reserves, they basically just mine more gold or increase gold production. It's a very simple way to put it, of course.
Yeah.
You can only ramp that up so much, and you are dependent on the gold price. But I think it's 65% of the reserves are in gold,
Wow.
physical gold. I think it's the highest in the world right now.
Um,
I'm an equity investor,
yeah.
and then it's a very thin market. The liquidity is very bad.
Yeah.
It really reminded me of Indonesia when I first went there. Now, the first market I looked at when I was a junior analyst was Indonesia back in the summer of 1989.
Yeah.
And at that point, you only had 24 listed companies, and only seven of those that foreigners could invest in. And over the next few years, that changed dramatically. And I think within 4 or 5 years, there were about 200 or 300 companies that were listed.
Wow.
Yeah, so just yeah, I don't know if it's going to happen in Uzbekistan, but I think there was a handful of companies there that I thought would that made sense to invest in.
Yeah. What kind of companies have you gone in Uzbekistan for your fund?
Sure. Well, the biggest and best performing stock for our fund is a company called the Uzbek Commodity Exchange. And the reason I invested in them is that number one, act like a real company. They act like a private company. They have an investor relations team. They have a distributed shareholder base with banks, government, and a lot of individual investors. They have annual general board meetings and AGM, proper AGMs. But what really got me interested in them is that number one, they were growing fast. And then secondly, they had a commodity exchange, but they were only trading things spot. And they were saying that they don't have the legislation to trade any future or options. But when they did, they thought the volume could go up about 4 times. And so they recently, about a year ago, maybe a year and a half ago, they introduced legislations to allow that to happen. So they've done pretty well, and the share prices, they're growing really fast. And another thing that's happened, they've had a huge, one reason they've been growing so quickly is that the government has put all their procurement through the stock exchange. I mean, through the commodity exchange, sorry. And also this, all government companies have to sell their products through to the commodity exchange.
Okay.
So to give an example, instead of the the government-owned cement companies selling their products directly to their customers, the cement companies have to sell their products through the commodity exchange.
Okay.
And what that does is it cuts down the how would you say, the under the table money that the distributors for the cement company used to take. So as you see the volume of cement sales through the commodity exchange increase, you could also see the profits margins of another cement company that we invested in, they would increase also. So we kind of got a double whammy on it.
Wow, that's impressive. And from going kind of across the board to Argentina, it's a very different economy, one that seems to be always in some kind of crisis and always somewhat reverts out to it. But it's had from an exchange point, a good year this year. The Nodal's up kind of 64%. What companies do you see in Argentina? And what specifically do you see about the country, or is it just the specific companies that you see fascinating in Argentina?
It's both. Basically, we've been in Argentina for about 3 years now.
Yeah.
Excuse me. We've been in Argentina for about 3 years now. I first went down there in the fall of 2019, just before COVID. And the reason for going down there was the stock market crashed, the currency crashed, and stocks came down to a valuation level that was, about 3 times Kate, I think. Something like 4 times EV/EBITDA, 6% dividend yield. This is all on average. And then just when I started to do some research, you could find quite a few of the companies were very well managed. They just happened to be in a really, just the Argentinian macroeconomic situation is just, it's just crazy, right? So that keeps a lot of people away, understandably. But when I go down, it was just so cheap. I really wanted to take a look at it to see what was going down. So I made the long trip, which is very long actually, from Hong Kong down to Buenos Aires. And what you found was that it was basically a U.S. dollarized economy. I mean, all the transactions take place in pesos, but almost everybody's thinking in U.S. dollars. And whether it be, so even one company that we have there is a property company called Consultadio, and everything's basically U.S. dollar based. I think and even their internal accounts are in U.S. dollars, and everything's translated back into pesos.
Get an absolute discount back. Well, still to this day, you're getting an absolute discount from the dollar perspective. In peso even to this day.
To give you another example is, one of our best performing stocks there is a small company called Mirgor. And Mirgor, they're the largest cell phone manufacturer in Argentina, with a market share of about 60%. Almost everything else is imported. And, they basically have to run a U.S. dollar business because they get all their components from abroad and assemble them there. And they had about a 30% market share when I invested in them, and they got into a 60% market share because they purchased the other large assembler, which was manufacturing LG phones at the time. Mirgor manufactures Samsung phones, or assembles Samsung phones. The reason they bought them is because it was almost an arranged deal. The U.S. owner wanted to get out of Argentina, so Mirgor, the company we invested in, bought the second largest manufacturer for $1 plus debt, just because they were the only people buying it. And now they're trading at about, even after our stock increasing, I think 2.5 times, they're still trading at about 4 times PE.
Wow. Super cheap.
Net cash on their balance sheet. And this kind of brings up another point about investing in kind of these places where the macroeconomy is just doesn't make any sense at all to people kind of outside the country. Nobody's going into Argentina. They're not going to have any competition for some time.
That's a very good point.
Simply because if you're a middle manager nobody wants to go in Argentina. If anything, people are leaving. So Mirgor, because they have cash on the balance sheet, they want to buy other manufacturing companies, and they said they're in no hurry at all because the deals are just getting better all the time.
So it's got a kind of monopoly. There's some companies that have a monopoly on Argentina. It's very low PE ratios.
That's right. This one company, and there's other companies like that. They're just in these places where the people have kind of ridden off the country. It's not a huge economy, even though it's a pretty substantial country, and there's a lot of smart people there. People just don't want to go in. It's kind of hard to, if you're a middle manager
in crisis,
right. It'll be hard to tell your boss, I want to go to Argentina to start a business there.
That's interesting. And do you envisage staying there long term in Argentina? Because it's a bit different to some other kind of frontier markets that have got good growth expectations, or do you expect just to get to a normal P ratio and then sell out and look elsewhere in Argentina?
There's no reason I'd sell it right now. I mean, the stocks that we have there are still inexpensive. They're all leaders in their field.
Yeah,
We're going to have elections about a year from now, and it looks like a more conservative or business-oriented government would come into power.
yeah,
So there's a lot of there's a lot of really bright people in Argentina. And there are manufacturing, a lot of good scientists, and it's good programs there. The political environment, the economic environment's not stable, but the political environment, you do have elections every 4 years, and it is a functioning democracy.
yeah. Okay, interesting. And just going back across the central part of the world, Turkey, very open country. It's also had a bit of currency devaluation, but it's looking to revamp. And one of the countries where seems to a lot of Russians are going, a lot of companies as well, and people. I think it's being one of the, correct me if I'm wrong, one of the best performing countries year to date. So especially when seeing a recession, Turkey's had a top performing index. So I'm sure you've done well out of that. Where do you invest in Turkey, and what do you see kind of from a long term perspective in Turkey?
I'm really impressed. Again, maybe I should take a step back. Is that I when I look for companies, and when I do, my macro event analysis is pretty simple. I don't spend much time on it, to be honest. I basically say, is the crisis, is the country in a crisis, or a financial crisis? If it's not, I probably don't want to take a look at it.
Yeah,
And then if it is in a crisis, then I have to figure out what to buy. And my criteria I look at three things when I make a stock selection. I call it the investment, my trifecta, which is looking at people, structure, and value.
yeah,
So I look at companies that are managed and owned by good people. The controlling shareholders are good people. The structure aligns minority and majority interest, and the valuation is just super cheap. And typically, when you go into a crisis, everything's really cheap. Everything's been sold down. The one thing, what's that expression? The one thing that goes up in a crisis is correlation. Everything goes to zero. Everything goes down.
yeah,
And that's kind of why I like going to a crisis, because it's, you can really focus on, instead of focusing on the numbers and valuation, you can focus on the quality of the company. Who are the people
yeah,
running it? And it's kind of, I was thinking about this the other day, and people love to work for winners, right?
yeah,
It's people like, whether that be Steve Jobs or Elon Musk, or people, you want to work for somebody who has a good reputation, and you think you're going to be treated well. And so it's kind of, I guess, a snowball effect.
yeah,
And I think that's why I focus so much on people. And a lot of times the things that really drive stock prices are things that are not already in the price when you invest in it. And I think one thing that, put the weight of finding a company that's going to have a positive surprise, that's going to be better if it's managed by good people, by good managers. But you also want to make sure that the positive surprises are going to benefit the minority shareholders. And so I spend a lot of time looking at the structure and ways for the listed company to take cash flow away from the listed company and into the major shareholders' pockets. And that happens an awful lot through basically some sort of negative related party transactions, or a kind of a financing pump and dump. There's a lot of different ways you could the controlling shareholders can kind of misappropriate or take cash out of the company for the benefit of the majority shareholders
Yeah.
and not for the benefit of or to the detriment of minority shareholders. So those are the things I really look out for, and I
Okay.
spend a lot. That's why I go to the country and spend a lot of time.
I guess that entails
It's a
quite
lot
a lot
easier
of,
just to buy.
yeah, on the ground research and really kind of getting in depth into the country. And I think that's why it's such a unique and special fund. Is that you do go on the ground, you do go into research these companies specifically.
Yeah.
On these options.
Yeah. That's right. The first part of that structure is finding who owns what.
Yeah.
So I was just in Sri Lanka, and I mapped about I think a half to three quarters of all the listed. I think there's about 200 listed companies there, and I mapped I think about three quarters of them to their controlling shareholder. And
yeah. Wow.
there are a couple of controlling shareholders where I didn't like. And so like the biggest one guy, he owns about 22 or controls 22 listed companies there. I don't like him, so I can just stop analyzing or stop looking at those 22 companies and just concentrate on the people where I think there's more of a alignment of interest between minority and majority shareholders.
And what companies do you see presently in Sri Lanka? Obviously, there's a lot of attention this year for the crisis. Just very quickly, what companies have you seen that's got a lot of potential in the Sri Lankan crisis, and where do you think Sri Lanka is going? I know we spoke a bit before about Sri Lanka.
Mm-hmm. Well, I think we're over in Sri Lanka. We're kind of, for lack of a better word, overweight conglomerates. There's a lot of there's a lot of the business groups own the majority of the listed companies in Sri Lanka, and some of the business groups I like, and I like the business groups where everything they have a list. They listed the holding company, because if the holding company is listed, then you have a lot more, I think, alignment and transparency into the group than you do if the holding company is not listed. And so if the holding company is listed and the majority and the controlling shareholders don't have much besides the holding company, then you have a pretty good alignment of interest between the controlling shareholders and the minority shareholders. So that's kind of what we're overweight now. So there's one company that I guess, for lack of a better word, is my favorite, is called Hemas Holdings, and they're in consumer goods and also and pharmaceuticals is their two biggest verticals.
Okay.
Yeah, and then we're getting in the founding family. They have a good corporate structure, or good. There's basically four siblings of the founder who control the company. They did their corporate governance a couple of years ago, and they actually bought a whole lot of stock a couple of years ago at a much higher price. And so it's kind of nice to get in. So that's kind of what I consider the smart money. And so it's nice to get in at a very big discount to what smart money had gotten it for.
Yeah. And do you see somewhat of, from a macro perspective, Sri Lanka stabilizing and getting back to normality from either the IMF, the World Bank, or the Asian Bank, specifically China, getting back in the next 5 to 10 years, and those companies redeeming, or at least from a share price analysis, coming back to kind of normal levels?
You never really know. I suspect that for right now, a lot of the bad policies that brought them to the financial crisis, they're starting to be reversed or at least addressed.
Yeah.
So the things that led them into the crisis was a rapid decrease in agricultural production, and that was caused by about 2 years ago, maybe a year and a half ago, they adopted a law that basically banned all chemical fertilizers. And so that was a big shock to the agricultural community. And almost predictably, their agricultural output went down. So, Sri Lanka used to be self-sufficient in rice production, and then they had to import rice or start importing rice. After the local production went down because the farmers didn't have the adequate fertilizer to use. And that happened, tea production went down, not so much because that's a bush. It's not that seasonal. But basically everything, a lot of agricultural production went down. Prices went up, of course. And more importantly, their foreign exchange started to be depleted because they had to import a lot more food.
Yeah.
And that means they have less foreign exchange for other things. And so that policy was reversed, I think, back in, I think even before I went there, back in April or May. And then they've started to, the previous government lowered the tax rate. So the government was literally running out of money. They hired a lot more people, put a lot of people on the government payroll. I forget how many tens of thousands of people you had for Sri Lankan Airlines, which only had, I don't know, 15 or 20 planes. But it was just, you hear the stories of just how overbloated the state-owned enterprise were, how overbloated the government was, how overbloated the defense industry was, or the defense department was. And then you hear, on the ground, you're hearing stories of taxi cab drivers who would have to run back, or tuk-tuk drivers who would have to run back and check out of their day job, their official job, at 5 o'clock every day.
Oh, wow.
They would check in the morning, check in the evening, and the rest of the time they just drive a taxi.
Wow, interesting. We'll have to kind of wrap up there, but it's been absolutely fascinating to talk, and I think we'll have to do another kind of session on your outlooks on more specific areas such as Nigeria, Egypt, and China to talk all day. And it's been absolutely fascinating to get to know a bit about your fund. Is there anywhere where they can find more information about your fund and where it invests, and a bit of info about yourself?
Sure. I'm on LinkedIn. You can. I have a pretty. My last name is spelled kind of unusually. It's spelled McGaughy. If you type in Michael McGaughy in LinkedIn, it should be pretty easy to find there. And then you can also follow me on Twitter. Again, if you type in my name in Twitter, I should come up pretty quickly. But you can also contact me at Michael McGaughy, McGaughy at fusionwml.com, which is our the management firm we use for our fund.
Excellent. Well, really, thank you so much.
Just to let you know, it's a private fund, so unfortunately, it's only for sophisticated investors. We have $100,000 minimum investment in the fund. Which is a Cayman Island regulation.
Sure.
So I'd love to lower that, and I'm thinking about putting in ways to lower that. But for right now, it's $100,000 minimum for the fund.
Sure. Well, thank you so much for your time. I really do think, honestly, that it is one of the most unique funds, and probably one of the best funds right now to make use of the diversification to what you see in the West. So really appreciate the time, and all the best.
Oh, thanks a lot for having me on it. I really love what I do. I'm a big shareholder of the fund. I really do think it's, for me at least, is the best way to invest. Buy when things that people don't like, and buy when you have stunning value, and hold for a long term, and buy quality, of course.
Completely agree.